Hello everyone. Bet Mangezi. Welcome. I hope you can hear me clearly. I hope everyone can hear me clearly. Can you hear me clearly? Hello, Tendai. Can you hear me clearly? And also, can you see my screen properly? Are you seeing the screen properly? We're trying to use this YouTube, as some people last time said the screen share was not showing on their screens, especially for those that volume too low. All right, let me adjust the volume. All right, I think now you can hear me clearly. I've adjusted the volume. Can you confirm that you can hear me? All right, so let's start our webinar today. Welcome to this webinar, 5 common tax mistakes small businesses make and how to avoid them as a business owner, right? So that's our webinar today. So we are going to talk about the 5 common mistakes small businesses make. Some of them, these are simple, but you need to be aware of the mistakes so that you don't make them and you keep yourself compliant and also keep yourself informed. So we'll start with the key tax obligations for Zim businesses, right? So when you are saying tax obligations, these are the taxes that you need to pay, right? Or you need to register for, right? So we'll talk of the 4 main tax obligations as a small business that you need to know of as you start your business. So at first, you need to know that you need to register for income tax, right? What is income tax? This is tax that is levied on profits realized by businesses, right? So when you are running a business, when you make profit, that's when you pay income tax. So the standard rate for income tax for companies is 25%. So this means that if you have your sales, right, of 1,000, then you have your cost of sales or cost of production of 600, you'll be left with $400 as your gross profit. right? Then you might have expenses, operating expenses like fuel, rent, or 400. Then you don't have a profit. Your income tax will be zero. That means you need not to pay income tax. However, you need to do a return to Zimra for the transactions you did or the business you carried out for the whole year. So that's for income tax. You need to understand that uh, you need to register for income tax as a business. So that's the first tax obligation a business needs to register. This one, every business has to register for it. It's registered automatically when you register for tax. This is automatic. Then we have other taxes like, so this is the first tax, right? So the second tax we will need to talk of is your payee. So payee is paid by the employees, but is deducted at source. That means you as a business owner, you need to deduct this tax and remit to Zimra. And remit to Zimra. However, when you register for tax in terms, this one is not registered automatically. Right? This one is not registered automatically because a business might start, but it might not employ any employees. So when you are still small and you don't have any employees, you don't have to register for this tax. And when you have employees whom you are not paying a threshold of over $100 in basic pay, you don't need to register for this tax. Let's say you are giving them as bonuses, you might not register for this tax. So as a small business owner, it's one of your tax obligations, but it's not registered automatically when you register for tax. So this is for payee. Then we move on to other tax, that is VAT, right? So VAT is paid by everyone. Everyone in the economy pays VAT. When you buy at Pick and Pay or any shop you are buying, you are either paying VAT one way or the other. So as a business, when you reach a certain level of transactions, they were reduced to 25,000 USD per year. So if you have sales that exceed 25,000 a year, you are obligated to register for VAT. That means the government gives you the opportunity to collect their VAT on their behalf. So that means you'll be collecting VAT and remit to Zimra. But also in the same way, if you buy from your suppliers, it will reduce the VAT that you need to remit to Zimra. So that's the other advantage of registering for VAT. So it's mandatory when you reach your sales reach 25,000 in USD terms or equivalent in ZWG, you need to register for VAT. It comes with penalties. When you don't register and Zimra comes and assess you and see that your monthly sales and we multiply them by 12, they are likely to reach 25,000 or surpass 25,000. They'll give you a penalty for not registering VAT. So it comes with penalties. Then the last tax that we need to touch on is for small businesses is what we call presumptive tax. So this presumptive tax is a tax that is based on an assumption. Let's say you are a hairdresser. Zimra is categories of each sectors or each person in each industry. Let's say hairdresser or um, transport operator, right? When you are a transport operator or a hairdresser who is not keeping books or who is not registered for tax, Zimra gets you in a category. Let's say you are a professional, you are a lawyer, but you are not registered for tax, you don't keep your books and you don't submit returns. They will say on a yearly basis, you need to pay 4,000 USD. So this presumptive tax is a tax that is assumed, especially, for example, I want to give you an example. When you want to buy a car outside or import a car, let's say you bought your car from Japan, then the guys from the clearance side they say, we need your details, and they would say we need your tax clearance. So as an individual, you can get a tax clearance, but if you don't register properly in your category, you find yourself owing Zimra so much because you they put you on this presumptive tax. So most of people, you need a tax clearance. They give you a tin. When you have your tin, you get your tax clearance at that moment. However, you'll be charged. You'll be given a category that will be assumed as presumptive tax. And that presumptive tax, when you want something else, they will say you have an obligation that you need to pay to Zimra without you knowing. So this is the last tax that you need to be aware of as a business owner. So these are the tax obligations, the four main tax obligations that you need to be aware of as a business owner: income tax, payee, VAT, and presumptive tax. So our topic today is the 5 common tax mistakes small businesses make and how to avoid them. So we have touched on the key tax obligations, right? Then now we need to go on the mistakes that business owners make. So our first mistake business owners make is poor record keeping. So our first session that we did, the free webinar, we talked on how to keep your records as a business owner. So this poor record keeping leads you to not. It's a text mistake here. So you need to have a proper way of proper record keeping. So as we said, you need to have a system in place. You need to have a system for record keeping, whether it's manual, whether it's manual or digitalized. You need to have a system in place for record keeping, because when you start on a strong foundation, what you all need to understand is we all need to start on a strong foundation. When you start on a strong foundation, you will not face many head-ons in the long run, because business, as we might think is sailing through. Entrepreneurship is just sailing through, but entrepreneurship is the most difficult thing to do in any endeavor that you may want to do, especially when you start on the wrong foundation. So wrong foundation might lead you to see being a business owner as strenuous. For sure, it is strenuous. So you need to start on a strong foundation by having your records kept up. With these days, we talked about the tools that you can use. We have Excel spreadsheets, right? We have Google Sheets. Everyone has a Google account, right? We have Google Docs. Then we have other free accounting softwares like Loives for point of sale. Then there is also another system for accounting that is called Wave Accounting. Then also we have Zoho Books and QuickBooks. So this is for record keeping. You need to start on a strong foundation, and being on a strong foundation is having a proper record keeping for your business. So this is number one mistake business owners make. So we go to number two. What is mistake number two? This one is a very big mistake that even if the best way to resolve it is to have someone who manages your books and manages your money, but also with a lot of transparency. Because this mixing personal and business finance is very common, especially when you are starting out. And we talked about it on our webinar for record keeping. The best way, especially in this economy in Zimbabwe, where we are dealing with cash, the best way is to have a separate or set up a worksheet or a Google Sheet. We say we preferred a Google Sheet. A Google Sheet like this one, where you put your money, your cash in, your sales, that is your cash in, right? Then you have your cash out. Then also you have your running balance. The most important thing on this worksheet is the running balance, which is automated. Because when you automate this, you can easily verify the balances that you have for the business and the balances that you might want to use for your personal reasons. Let's say you want to use $100. We say about this $100. If you want to use $100, you can just take $100 and see what was the remaining balance. This way, it keeps you in check in terms of mixing personal and business finance. So we talked about this mistake, mixing personal funds and business funds. The best solution, if you trust banking in Zimbabwe, you can just open a bank account and keep your money for the business side in a business account, or your personal money you transfer to your personal account. But having a Google Sheet that you can update on the go on the phone is also a great way of separating business and personal finance. Then also you can find what we call an accountability partner. Yes, we understand that the business is yours, but you might need someone who keeps you in check, who keeps you accountable. So someone who has access to this Google Sheet, and sometimes he or she does checks if business finance is matching what's on the ground. So you can easily separate personal funds and business funds. So the best way of solving this issue is having, especially if you are dealing with cash, a separate Google Sheet account which tracks your money, which has a balance which is automated, and try to find an accountability partner. An accountability partner will be a great way of separating business finance and personal finance. Maybe an accountant, maybe your PA, or anyone who can keep keep you in check for your for separating your business money and personal finance. So this is the best way to separate your finances. So that's mistake number two: mixing personal funds and business finance. Then another tax mistake businesses make is ignoring tax deadlines. This one is now a big challenge because now with terms it's automated. What do I mean by when you have a tax clearance or when you are registered to terms right now? When you forget to do a return for your tax obligation, let's say it's income tax. Your income tax returns needs to be done. There are quarterly payment dates and yearly returns. When you forget to do a return or do the payment, the system will automatically calculate a missing return, and per day it charges $30. So that means if you miss a deadline, for example, if you miss a deadline, let's say income tax is said uh, 30 March or 31 March, I'm not so sure, right? 2025, right? And you don't submit your return on 31 March, the system will start to automatically calculate and put interest on that return by calculating 30 days per day, 30 days per day, up to 90 days. So it will calculate these $30 per day by 90 days. Then when it reaches 90 days, it stops. So maybe there's something bad happened to the business. So you need to be aware of the dates of your tax deadlines. So I would like to list the tax deadlines for you for different categories we have talked about. So when you have employees, we have payee. This is paid every 10th of the following month. What does it mean? Let's say we are in February, right? End of February 2025. The return and the payments needs to be submitted before or on the 10th of March. Right? So this is for paying. So let's say you have your bill for your employees, you paid your employees 10,000, right? You need to have an Excel spreadsheet that calculates your salaries automatically. Uh, these days, you don't need, especially if you're small, you don't need a payroll system. You just need a template which is accurate that can produce your or calculate your payroll automatically every month. It's something that's so simple in Excel, and we have a template for that, which we are going to be giving out to those who are attending our tax basics course for next week. So let's say you issue out 10,000. You have paid that you need to make to Zimra. Maybe it will be about around 1 point or 2,000, right? Depending on the calculations that were done. So this amount needs to be, the return needs to be done before or on the 10th of March, right? Then you pay to Zimra. So now, as I said, if you attended the previous session, now what Zimra is doing is, for every employee, every employee now needs to have a TIN number, and you need to register them in terms so that you can do a return. So you need to do that as well. And also, if you are the only employee in your business, you need to have your TIN number as an employee. Then the company has also its own TIN number. So this is for payee. So payee, it's due on the 10th of every month, right? Then we have what we call VAT. This one is now due on the 15th of the following month. So this one depends on the category that you are. So for small businesses, they are in category B, where when you have VAT registered, where your December and January sales, the return needs to be submitted in February. But for these small businesses, category B, they are due on the 25th of the month of the third month of sales. For example, as we said here, these are the sales for a category B company. So that means the sales that they had in December and January, their VAT was due 2 days ago. So they need to have submitted the return and also have made the payment to Zimra. But for companies that are mid-sized companies, these ones are in category C. In category C, that means you pay monthly. December sales, VAT needs to be paid in January, the next month, January 2025. This is January 24, January 25. So this is for VAT. So for this category, they are due on the 15th. It changed. It used to be 25, but as of January 2025, the commissioner said the December, the returns are now due on the 15th of every month. So if you are in category C, you need to be aware of that. They are starting to implement that in this following month, in March. So you need to be aware of that. So this is for VAT. Then for income tax. So income tax, as we said, so income tax is a tax that is paid on your profits, right? So we are in 2024, 2025, right? So this year you haven't yet finished the 2025. So you make a provision you make an estimation. So an estimation, you are estimating that this year 2025, I'm thinking, or I'm estimating or forecasting. I'm forecasting that I'll make sales of 1,000, right? And I'm expecting my cost of sales or cost of production to be 600. Then I'll get a gross profit of 400, right? My operating expenses, I'm expecting them to be 350. So I'll be left with $50, right? So Zimra said, when this is for the whole year, right? But this money, when it might become a burden if we say pay 25% of this profit this next year. Let's say you made 2 million. Then let's say you need to pay 25% of that 2 million all at once. It will become a burden. So you need to pay it on a quarterly basis. That means you need to pay it 4 times the provision that you make, 4 times a year, right? So you need to pay it in March, then you pay it in June, then you need to pay it also in September, then also you need to pay, it's October or September, then also you need to pay it in December. So the 25% that you would have gotten from your estimation of expecting to make a profit of 50%, you will pay it over the year. Then when the year ends, when your books are done, when your books are done, that's when you say, last year I didn't make 50, I made 60 or I made 40. So that's where you can adjust. So that's for my whiteboard is now refreshing. I think there was a network issue. So while it's refreshing, I think I don't know what happened here. All right, now we are back online. So that's income tax. So income tax is so simple, but also you need to be aware so that you don't get penalties for not adhering to income tax. All right. Then we have presumptive tax. So for income tax, you need to get to understand it because of our time. Most of these will be fully explained and have practicals in our tax basics course that is running from next week. So lastly we have our presumptive tax. So presumptive tax, as we said, is for individuals. So it's mainly paid during the start of the year. So it's usually due on the 1st, 31 January, right? Then also, I would like to talk of the payee side, on the payee. So every year, let's say you are registered for payee, there is what they call ITF, which is I'm not sure is it still but it's a return for payee. So when you have paid your employees for the 12 months, right? You need to confirm or reconcile all the amounts that you pay your employees. So this one is not yet available for automation in terms, but it's a return that you do manually and send to the stipulated email addresses depending on your category. Are you in a small category, small business category, mid companies category, or large companies category? So it depends. I think this one you usually receive an email from the ZIMRA authorities reminding you to submit this return. So this is for for tax deadlines. So you need to be aware of the tax deadlines. The best way we can do, because now we are living in a digital era, go in your Google calendar, whether you're using Samsung, whether you're using Apple iPhone or Google phone, you go in the calendar and set that on the 8th of every month, I need to remember payee. On the 25th or the 20th of every month, I need to remember about VAT, so that you don't get these penalties, because $30 now you'll be forced to pay it, because at some point you need to interact with the ZIMRA. You might need to have a tax clearance. You might need to have something to do with ZIMRA, and you have an outstanding balance of because of $120 because you did adhere to the tax deadlines. So the best way, you just go on your phone. If you have a business, go and say on 30 April or 30 March, return for income tax is outstanding or needs to be done, so that you are always knowing when you are supposed to do them. Then we go to mistake number 4. So mistake number 4 is failure to register for taxes. So as we have said, the key tax obligation that we have is VAT, income tax, but as a business owner, you need to register for income tax. I would advise you to register for income tax, especially if you are starting out, because this tax, even when you are doing business and you're making profits, you don't have to pay for the income tax, but it gets you in the motion of understanding how taxes work. Because in life, there is nothing certain like death and taxes. Everyone has to pay their share, whether we like it or not. Especially now that ZIMRA is enforcing compliance, one way or the other, you need to survive. Your business needs to survive, and you need to pay tax. But understanding it and keeping yourself well informed will keep you in track and knowing which taxes are important, which ones will get me in get more penalties. So you need to register for income tax. And as your business grows, you might need to expand to pay. Then as your business grows, you expand to VAT. Then as your business grows, there will come other taxes that will be come with with growth, like withholding taxes, right? There are lots of taxes, but the basic ones that you need to understand as a small business owner, you need to understand the basic ones for yourself to keep your business protected and your business compliant in this volatile economy. Then another last mistake is not claiming. So I would like to give you an example of VAT. So when you register for VAT as a business owner, it works like this. We have what we call output tax, right? Then we have what we call input tax. So if you are charging something for dollar, this is before VAT, you are charging something for $1, right? When you are registered for charge it at $15, right? Cents. So it's 15% tax, right? So that $15, the 15 cents, this 15 cents, you will need to remit it to Zimra, right? Because you are doing business, you need to buy from your suppliers, right? Let's say you bought something from your suppliers for which gives you tax or output tax of 13 cents, right? And the 13 cents, that means you only need to pay 2 cents to Zimra, right? So this is the advantage of claiming deductions. It's understanding now which fiscal device management system is now fully automated and live, that it submits your data or your sales that you have made on that day directly to Zimra servers in a live session. As you sell, when your physical device is automatically sends the data to Zimra servers. That's why it's now issuing that QR code for invoices. So we need to be aware of the purchases that you are making. When you buy something in Pick and Pay, you, you need to put your details on on that invoice. Let's say you bought something for 200 while you're buying for the business, right? While you're buying for the business, you need to put your details, that is TIN and VAT number. This will reduce your burden of the VAT that you need to remit to Zimra. This is so important. You need to, if you are VAT registered, you need to take account where you buy and how you buy it. You buy something, you are into a solar business, right? Solar installation, right? Then you buy from maybe another supplier, maybe Drip Tech, right? Drip Tech charges you VAT. And because you are just ignorant about it, you don't put your details now. Because starting April, it will be automatically, your input VAT will automatically go into your terms account. That means the sales that you are selling, they are going into the servers. The purchases that you are making from registered VAT suppliers will automatically go into your input tax in terms. So that means you need to be aware of the way you are buying now. You need to put your details. You need to know your details, your TIN number, your company TIN number. You need to know it, and the company VAT number. So whenever you get the opportunity to buy, when you're buying for the company, you buy and make sure that your details are put on that receipt so that you can claim that money, so that it reduces the burden of the amount you need to pay for VAT. We meet the amount. So this is a mistake most businesses make. not claiming the right deductions. There are a lot of deductions that can be deducted. Some now may need your accountant to do them and claim them. But the basic ones, if you are doing the purchases that you are buying, where especially when the option is there, where you can claim VAT, and reduce the obligation of VAT that you need to submit to Zim. So this is the session of 5 common mistakes or 5 common tax mistakes that you need to be aware of as a business owner, and how you can avoid them. You have seen how you can avoid all this. You need to not to fail to register for tax. The best you can do is to register for income tax, the first, and make sure that when you employ contract a consultant, understand which is registered on your account, because if you don't understand them or don't take note, you might find yourself fleeing that business or fleeing out of country because you can't do business now because you have lots and lots of obligations that you need to cover. Then also we talked about ignoring tax deadlines. You know the penalties. We highlight the penalties that are now there at Zimra. It's $30 per day. You need to take note that per day. Mutuli is the one who advised or put a statutory instrument that it is now $30 a day for missing a return. So, ignoring tax deadlines, we said use your calendar. Your calendar is your best tool. Set reminders 2 days before when it's due. It will save you a lot of trouble. Even if you have an accountant that's doing that for you, you need to keep it keep him or her in check so that you don't get caught off guard. So you need to be prepared for that. So before we close this session, I would like to talk to you or show you our advert for the tax compliant tax basis that's running from 4 March to 8 March. This is an extensive tax basics course that will touch on payee income tax and will give you templates on how you can calculate your income tax, your VAT, and your payroll. So for this training, it will be 5 days from 4 March to 8 March, and it's costing only $50, right? Those who attended this webinar, we are giving a discount. A discount of 20%. So that means for $50, you pay $40. So this discount offer is only running for the next 3 days, starting today, tomorrow, and Saturday. So it will expire on Saturday evening. So for those who are interested in joining us, you can join us by texting our WhatsApp number code 20. You just type code 20 and you get the payment details and you enjoy the 20% discount. So this is an opportunity that you might need to take into consideration, opportunity for you to utilize this discount. After this, we'll be running on the full price of $50. So thank you very much. The bad thing about YouTube Live is we can't ask questions as we were doing in the previous session. Each system has its pros and cons. The cons, you can only comment. But for this one, it's you can only for the previous one we were interactive. So thank you very much for attending this webinar. I hope you have gained so much, and I'm hoping we'll hear more your comments from in the group from what you have gained. And if you have any questions, you can ask in the WhatsApp group so that help each other to get everyone compliant and keep your businesses uh, safe. Thank you very much. We'll end this session now. Thank you very much.